exercise. If people can buy a car and pay, they have to pay $5,000 in oil every year or in petrol every year, and it's only going to cost them, call it $1,500 to fill that same car with electricity, then they're saving themselves $3,500 every year. The question is, what's the payback on that? So if the battery cost is only $3,500 more, so you get your payback in 1 year's time, then people will do it. If the payback is 2 years, people will probably still do it. If the payback's 10 years, people won't do it. And so that's the way I sort of think about this whole equation. And so we've had a lot of moving parts recently. So I just want to run through a few charts about what that actually means. The other thing I want to throw in quickly is hydrogen. So if you're talking about large scale storage, hydrogen works better than batteries once you get out past about 3 or 4 days. Less than 2 days, batteries are miles in front of hydrogen, and the reality is, for most people, they don't need anywhere near that amount of storage in terms of your car or your house, and so batteries just are so much cheaper that it makes far more sense. Hydrogen might have more, some capabilities for some of the longer term ones, and both these technologies are coming down in cost. Well, sorry, both of them are. Batteries came down a long way in cost. We've probably got a year or so of batteries actually going up in cost, or at least flattening out. But there are some, but that's because of shortages and supply chain issues. There are the actual fundamental underlying costs of producing these batteries is keeps going down year after year, and that's sort of only getting better in terms of that. So I've got this next chart showing the average US consumer. So what this is a payback line about saying how big of a battery do you want? How big of a battery do you need in your car? Now, if you're only driving 100 kilometers a week, so 5,000 kilometers a year, and you just want to fill up your car once a week, and you're happy that you're using that car back and forth to the station and maybe down to the shops, and that's it, then you could get away with a battery that's only only has 100 kilometers of range. And that's that very bottom line. And that's sort of going, well, at $100 of oil, your payback on that battery is less than 2 years at the moment, which for me is a no-brainer. Yes, my payback's less than 2 years, I'll absolutely switch to it. The thing is, people do have range anxiety though. So if you sort of jump to 300 kilometers, and keeping in mind the average car's probably driving more like 10 to 12,000 kilometers a year, so 200 kilometers a week. So if you're on a 300 kilometer range, so theoretically you only do need to fill up once every 10 days or so. You're still less than 4 years for a sort of smallish battery. Again, a bit of a no-brainer. The issue is people want bigger batteries, and so if you jump to sort of the longer range batteries, and looking at, say, like an 800 kilometer battery or a 500 mile battery, which is what you get in some of the top end sort of Teslas, your payback's sort of 8 to 10 years. So even at current oil prices. So that gives you a rough guide. So in terms of saying at the moment, yes, it is starting to get worth for a US person to switch across. You get similar stats in China, and I just sort of want to highlight as well that I think China is more used to having smaller batteries. So there's their biggest selling electric vehicle in China is I'm not sure I can pronounce this right, but Hongyang Mini, which is about $4,000 for the car, and you get 120 kilometer range, and so your payback on that is like 2.5 years in terms of with current petrol prices and current energy prices in China. So again, the impetus to switch on smaller, cheaper cars in China is already there. It's quite different in Europe and quite different in Australia. And the reason why is you've got higher energy prices in both countries, and also bigger fuel taxes, particularly in Europe. And so in Europe, the actual economics to switching to electric vehicles really is quite poor. So that's the country which is, the region which is converting the fastest, but actually the economics are actually really quite poor in terms of your payback periods, in terms of that, just given the costs. Having said that, they do want to get off. They do want to get off Russian oil, and so there's an impetus to switch. Finally, I know, sorry, I'm dragging this out, aren't I? It's I just wanted to highlight that, if we talk about commercial vehicles, and let's go back to the US again, and say you're talking about this driverless car that you're driving 100 kilometers every day and you're charging it every night, because you're doing it, or I think postal vans, for example, I think drive 120 kilometers a day on average, and and you can charge them every night and go back out again. Your payback's almost a year. So you basically, on a commercial vehicle, you can get your money back in maybe 18 months at the outside if you're just going with a small battery. Even with a bigger battery on some of these things, it's within 2 or 3 years you're starting to get payback on your investment. So commercial vehicles, absolutely well worth it. In the US, the numbers aren't quite as good in Australia and elsewhere. Except the other one I didn't put on is, let's say you're in Australia and you're filling it from your roof, top solar. Now you're miles in front, because your cost of electricity is a fraction of what it is if you actually have to pay for that electricity from the grid. So so basically the impetus behind oil is, look, prices are really high right now. There is a push towards EVs in Europe, in the US and China. The economics add up, but it's more about this range anxiety that people have. And if people and in the US, given the range anxiety, it probably isn't going to ready to switch wholesale switch across to EVs yet, unless you start getting to these driverless cars. And at driverless car points, then you're back on this chart that we're showing at the moment, where your payback is less than 2 years. And that's exactly why all the people who are doing driverless taxis, say Google and Cruise and a few of the other ones, they're all electric vehicles, because the payback is there and well worth it. So that sort of pretty much sort of sums up the demand for these. So the net effect actually, on oil, was that oil's difficult in that oil wells tend to they decline every year, not tend to decline, they do decline every year. And in particular, the US shale wells decline every year. So oil needs this constant reinvestment in order to just keep production where it is. Whereas most other commodities, that's not the case. The production sort of ticks over every year and quite often can increase with a relatively small spend. So oil's got this part where, again, it's a bit like that the line for lithium, in that we've got this one massive thing of supply and a massive thing of demand, and the balance is actually only really small at the other end. And can I see scenarios where we haven't put enough investment into oil, and that and EVs will come on much faster, and EVs will come on slower, and so oil prices will spike because there's a mismatch, absolutely. And can I see the opposite happening as well, where EVs switch over faster than expected, and we build too much oil, and you get this crashing in prices? Absolutely. Volatile prices is clearly on the case. The one thing I will say, though, is over $100, the economics really do start to add up, and we don't need much change in terms of the cost of a battery for it and battery costs are coming down, for it to be even better than what I've shown here. And so, for my point is that with an oil price over $100, the medium-term outlook for oil is worse than when we saw the oil prices back at sort of $60 to $80. Because at $60 to $80, the maths really didn't add up at all on a number of these ones. Whereas now, the impetus for people to start looking at EVs and start switching is much larger, given the oil price rises.